Okay, it looks like we're ready. Everybody, thank you for joining this session of AngelList Confidential, and welcome. We've got a very exciting panel with a couple of great panelists lined up for today. We're going to talk about building resilient funds. But before we jump into that, I just want to set a little bit of context. And some of this was covered in Avlok's keynote yesterday. For those of you who haven't listened to it, I highly encourage you to go listen to the recording when that's available. But just as some quick background, AngelList, at least in its modern instantiation, got its start by building software for SPVs. And then over time, we broadened that focus, and we started focusing on software for venture funds and for rolling funds. And we did this in combination with our in-house fund admin called Bell Tower. And this enabled AngelList to provide this all-in-one service that folks are familiar with, which includes fund admin and tax, accounting, fund formation, all of that good stuff. However, and as Avlok mentioned yesterday, as we've continued to work with more funds, and especially as we've worked with larger funds, we've heard more and more feedback from folks who say, I have an amazing relationship with my service provider. I understand I need to modernize my software stack, especially given harder and harder GP requirements, LP requirements, regulatory requirements. And so to address this, AngelList has decided and has announced that we are now actually fund admin agnostic. So what does that mean? How does that play out? How does that cash out? And it's two ways. The first way is that you can actually now use AngelList software with any fund admin. So it doesn't matter your fund size, doesn't matter the thesis, the AngelList platform can support you. And the second, which is particularly germane to this conversation, is AngelList is launching a preferred partnership network. And today there are 4 fund admins in this network. Bell Tower, which I talked about, and which will be an independent entity as of the end of 2023. We've got MG Stover, we've got Cornerstone, and we've got Four Pines. And we're very fortunate to have folks from Cornerstone and from Four Pines with us here today. Before I ask the panelists to introduce themselves and kick it over to them, one quick note. We are doing Q&A through Hopin. There should be a tab. Please think of the questions that you might want to ask, drop them in. We will try to get to some, maybe all of the questions, no promises or guarantees, but please start adding those. And that's why I've got this iPad here in front of me. I'll still steal the first couple of questions and make sure that we get some background with these panelists. But with that, let me turn the mic over to Michonne from Cornerstone and ask her to introduce both herself and Cornerstone.
Perfect. Thank you, Jim. And great to be here. So glad to be a part of this. I'm Michonne. I'm with Cornerstone. A little bit about me or my background. I started my career in music. I did my undergraduate degree in the bassoon. So a little bit different from typical fund admin or funds in general of what you would expect in their backgrounds. Started in New York. I was working as a freelance musician, working in fashion. Did that for several years until I joined Citco Fund Services on their investor relations team. Was there for a few years, and then that kind of led me to being at Cornerstone. Cornerstone is a full-service fund administrator. We work with primarily VC funds, but we also work with private equity on the growth side, not buyout, and then some real estate funds depending on the scope of what they're doing. We don't really ever touch hedge funds, but there are other great providers for those. We're headquartered in Utah, in Lehi, Utah, just south of Salt Lake City. And our clientele, we focus primarily on new and emerging managers, is really our bread and butter from when we started Cornerstone to now. We really like to be in the same vicinity of the new and emerging managers, trying to get things off the ground, be a resource to them and a support to them as they look about raising their first fund and where they want to be in future growth.
Outstanding. That was fantastic. And now over to Mike at Four Pines. Mike.
Thanks, Jim. Appreciate the opportunity to be here today, and thanks to the AngelList folks for having me.
Sure.
Mike Triggus, CEO and one of the founders, co-founders of Four Pines Fund Services. My personal background is I've spent plenty of time in the industry, both on the GP side as well as the fund administration side. So I bring, I think, a unique perspective to to the fund admin side, having spent so many years in the GP world. I like to say I really cut my teeth in my career in the GP world. I spent 8 years as the CFO of Portfolio Advisors. What was great about that is I got to see a lot of different types of GPs out there, from emerging GPs to some of the largest GPs in the world, from the buyout sector to the venture sector to the special situations, secondary. So I really had a tremendous education on the broader market, the alternatives market. From there, I started a fund administration firm called Carter Fund Services. I ended up selling that to Alter Domus. So I've seen a lot in that regard, from just what is happening in the broader sense of the market with all the M&A that's been going on over the last several years. I launched Four Pines with a couple of the partners in January of 2020. So we're a bit of a newer administration firm, but we come with a tremendous amount of experience. Our entire executive team, we've been around a long time, whether it's on the fund admin side or on the PE side. We bring decades of experience. And we as a firm at Four Pines, similar to Cornerstone, is we focus on emerging managers right up to multi-billion-dollar managers. We cover the venture space and we cover private equity. We do engage with buyout firms, growth equity firms, really across the PE spectrum. And same on the venture side. We'll start with some smaller managers right up to some of the larger managers that you see out there as well. Fund of funds, we have a particular expertise in secondary funds as well. We touch a little bit on the real estate and a little bit on the credit side, but I wouldn't say that we would be the go-to firm in those respective areas. It's more of, hey, we have a client that is expanding their own investment verticals and want us to jump in there. So that's kind of what we do. We're based in Connecticut. We have clients from the East Coast to the West Coast, a couple north of the border as well. So we cover a pretty wide range and spectrum of clients. So that's a little bit about me and a little bit about Four Pines.
Thank you. That was perfect. Outstanding. Okay, we're going to jump right in, but I want to set the stage a little bit. We talked a little bit yesterday about the fundraising environment. We talked about whether general partners should actually, is this the perfect opportunity to deploy capital, especially in the venture market. There was an interesting stat from Preqin, and I'm checking my notes to make sure I've got this right. There's currently roughly estimated, $3.3 trillion in demand among private markets funds, right? And there's only $1 trillion in available LP capital. So this is one of the toughest bear markets that we've seen over the past 10, 15 years. Given that as a backdrop, how would you suggest that funds, fund managers pivot their thinking? What are the things that they should give particular focus to on in this market? And Michonne, can we start with you?
Sure. The thing that I always encourage clients to think about, or funds to think about when they're fundraising, is how are you presenting your fund, right? There's part of this that I think gets lost from the backgrounds that most fund managers come from, in a sense of they probably have a really good track record. They know how to do what they've been doing. They know where they want to invest. But a lot of time they don't know how to sell that. And that's the portion that a lot of managers, I always talk to them about, is how are you actually going to present this? How are you building your pitch deck? How are you prepared to go and sit in front of potential investors and sell this idea to them to make them want to invest? And especially in a market like this, that's what's going to really help them stand out, is the ability to get in front of those investors and in those meetings walk in and say, here's what I'm doing and here's why I'm the best reason to invest and to be doing this.
Yeah, just picking up on that, I think digging it a little bit from a nuanced perspective, I think really understanding what makes you good at what you're doing. What is your differentiating factor? Is it a certain strategy? Is it a certain investment size or type or area that you're looking to invest in? Because you're now selling your expertise in something. And if you are sitting across from somebody and you switch spots, what would you say about your own deck and whether or not there's a real expertise there to get somebody to give you money? It's a huge responsibility for somebody to say, hey, I believe in you, I back you, and I'm going to do that by giving you capital to do it. So there's a lot there. So understanding what makes you good and what differentiates you from the market. And I think taking it a step further is understanding that investor, well, first of all, understanding what investor you're talking to. Are they more of an angel investor? Are they more of an institutional investor, or somewhere in between? And putting together a plan that goes just beyond, I'm a really good investor, because at the end of the day, there's a whole lot of other stuff that needs to get done in order for this whole thing to work. So if you're an emerging manager, really outlining and having a plan to start with, because when you have a game plan, it allows you to evaluate the market, it allows you to challenge your thesis about what you're doing, and then from there you get to pivot around, okay, this is resonating, this isn't resonating. So the more that you can think through and be forward looking with regard to hey, we're launching a fund, the better off you'll be and the more traction I think that you'll get, and the quicker you'll be able to pivot if there's something that's not resonating with the market. Because the idea is you want to raise this capital and go out and invest as quickly as possible. And we all know that takes a long time, especially in a market like we have right now, where folks, even established managers, are saying, okay, if we're raising $1 billion fund, maybe we'll peel that back and raise 800 million or 700 million, or maybe we have to do something a little bit different than what we were anticipating a year ago when we launched this fund. So.
Yeah, and to that point, I think the flexibility in being able to pivot within your plan is so crucial, especially in this market, of saying, here's our ideal state, this is where we want to be, this is what we're hoping to achieve, but understanding that it's probably going to be very difficult to achieve those ideal outcomes.
Yep.
So being able to be flexible and saying, do we change the structure, do we change the size, do we change the LP base, any of those items that can be movable, being able to look at secondary options for those, I think is only going to prove successful, because you yourself are saying, okay, here's my ideal state, but how do I get from there here to there? And what can change in that process?
Yeah. I think that's such a great piece of advice, because what we often see is you've got this idea, I'm going to go raise this $100 million fund and everything's going to be perfect. And then 6 months down the line, there's no traction. 9 months down the line, there's no traction. So I think being able to step back and read the tea leaves, so to speak, and say, okay, maybe the $100 million fund isn't going to work. So let's pivot. Let's create an SPV and put money into an SPV, because we mentioned track record earlier as being able to port that with you. There are a lot of folks that aren't able to bring a track record with you. So even though you as an investor may have a tremendous track record, how do you sell that when your prior firm doesn't allow you to take that with you? It's hard to do. So the way that you go about it is, okay, I had this in my mind that this was going to be a $100 million fund launch, but it's not working. So what do I need to do? Well, I think you need to pivot and consider going and building an SPV, and whether you keep them standalone, individual SPVs, or eventually roll them into a fund. Those are all the discussions that you have later on as you strategically start to move forward. The key is to get started and build. And if you stay so rigid with regard to this idea or this concept that I have to have a $100 million fund, you may not ever raise it. So just be open to ideas of how to just get launched, because that's the most important thing in my opinion, is just get out there.
Yeah.
One thing that you both talked about, there were a couple of threads that I picked up on that I want to hone in on, and this conversation, I guarantee we're not going to have enough time to cover everything. So one thing that I did want to start out with was just around the difference between emerging managers and established managers. Do you have different, I assume, you have different sets of advice or different things for them to look out for? What would those be?
I think for established managers, are you in terms of the context of raising capital? In terms of the context of both raising capital and running their fund on an ongoing basis, yeah. Yeah, in terms of the context of an established manager, I think it's again, you're constantly evaluating one, your relationships on an ongoing basis, right? Because at the end of the day, this is a tough market to be in, whether it's regulatory, whether it's LP demands. You have to evaluate all of your partners on a regular basis, because if you don't, you may not be getting the value that you need to get out of them. So whether it's your audit, your tax, your fund admin, your lawyers, your business, when you started, you may have started as a $100 million fund, but then if you're now managing $1 billion, $1.5 billion, your needs evolve and change over time. And I think you have to take a step back and say, okay, are we getting have our needs changed, and can our current providers continue to meet those needs? So I think just from a business perspective, you're constantly evaluating what you're doing and trying to get the most out of it. From a fundraising perspective, I think it's, where are we in the market? Who are our key LPs? What has that LP base done over time? Are they the same folks that we used when we raised 100 million versus 400 or 500 million? In having a pulse on what their needs are, what they're looking for, what their appetite is in this current market, because all of those things evolve and change over time. I think for emerging managers, it's a bit different. I think, you just, again, you need to get launched. You need to leverage your partners differently than you do with an established manager, and finding the folks that understand exactly what you're doing. Because what we find is new managers, again, they may be great investors, but they may not have ever run a firm before. And running a firm and a company brings out a whole slew of different challenges and headaches and whatever you want to call them, but they're very real. And you need to have a plan and to outline what it takes, again, from A to Z around all of your operations, your investment side, your IR side, your technology side. And day one, you don't have people to do those things. So where in the market am I going to look to find all of the people that I need to help me start my firm, launch my firm, and then really grow it?
And that's exactly what I was going to add to what you were saying, was find that support system. As a newer emerging manager, typically your environment is smaller, your support system is smaller, the people in your network, there's not as many. And so being able to really nail down, what is my support, who is backing me as I try to go out and raise this and get this off the ground, is going to be a very crucial part of that. And making sure that you have the right people in this space, like you're talking about, giving the time to those right people, having them help you through that process is going to be a key part of whether or not you're successful, because you're not just relying on your own information and your own smartness, you're now relying on a larger group of people to say, hey, here's what we think would be really beneficial for you, or here's a network that I have of LPs that you could talk to. Let me get you in front of them. And then just echoing what you said for established managers is, really nailing down where your time is being spent, the value add from that time spent, and if that relationship is something that is proving to be valuable, or if it's something that you're saying, maybe I could give a little less time to this relationship and start fostering something new and see where that can take me.
Yeah, and I'm sure you see this as well, especially in the emerging manager front, is finding those partners is so important to find the right ones. A lot of folks, investment guys, new GPs, they come to the market from big shops, and the big shops tend to use the bigger accounting firms, tax firms, lawyers, et cetera, et cetera. And it's great to have all of those well-known firms represent you, but when you're launching a firm, you may not have access to the same budget that you did at those larger firms, and that's okay, because there's plenty of folks that are downstream that are actually better for you at that moment in time to launch your fund. Because I always tell, the new GPs that I work with, the service providers that you use should be willing to put in a little bit of sweat equity into launching your firm. And if they don't, they're probably not the right partner for you. Because the reality is, everybody has an idea of what this should look like. In the universe, let's say, there's 70 things that me as a new GP have to do. but they're not all a must-have. Some are nice to have, and this is part of the nuance of the conversation with new managers and helping them get off the ground, because my must-have is different than yours. And as a new manager, figuring out what is important to you, you have to spend a lot of time as a new manager. Again, the holistic view of launching a fund is different than I'm really strong and I have a great track record of making an investment. So it goes well beyond that, because you have all these other considerations as you look to launch a firm. So zoning in on what those nice to have versus a must have, including service providers, including what industry publications you want, or even benefits. Do you want to use a PEO? Do you want to hire somebody to do all of this? And what do the benefits package look like? There's a lot there, and going through that is really challenging. So making sure that you have the right partners at that stage is critical to the success, I think, in starting a new firm.
You know, it's interesting. One theme that is coming out very strongly in what you both are saying is this idea of flexibility, of being able to adjust if and as, and it sounds like as is the appropriate word, things don't go exactly as you planned. But there is a question here around, like, you need to be at least some level of bullheaded, right? Like, you need to charge forward at least to some point. So how do you evaluate when to pivot and where to pivot? What are the non-negotiables? Are there any particular things that you think, no, this just needs to be core and you need to stick with it? Or, hey, look, it's been 9 months. I've not been able to meet my fundraising goal. Maybe it's time to pivot on X, Y, Z.
Yeah, I think all new managers are bullheaded by nature, right? That's why they are where they are.
That's why they're doing what they're doing.
That's exactly why they're doing what they're doing. And I can appreciate that, because I have quite a bit of that in myself. So it resonates with me.
Yeah.
I don't think there's a hard and fast rule about what to do, because every situation is different. Every nuance has to be considered. And sometimes you could ignore all of the best, what appeared to be the best advice at the time, because all the signals were pointing you in this direction to do this, but just there was something, in your, primal in you that said, hey, we need to go in this direction. And you follow that, because at the end of the day, it's up to you. It's your firm. You need to make these decisions. You're going to live and die with those decisions. And so it's really up to the GP to make that call. But we like to provide lots of counsel to the GPs to help guide them in those directions. But at the end of the day, they'll need to figure that out.
Yeah, and I think that's very well said. Leaving it up to the fund manager, right? Like, they have to feel good about what they're doing. They have to feel confident about what they're doing, and whether or not it succeeds or fails, they have to be okay with that outcome and know that through that process they were true to themselves in every decision they made, in every direction they went. And then having that support, like you were talking about previously, having those providers that can support them through that, and not they're saying you're making the wrong decision or you should do this, not that, but saying it's your call, we're here to support you, and we will stand by you and get you where you need to go with this, understanding that we aren't going to be here saying do this and this will make you successful. It's, if this is your choice, then we're here and we've got you.
I think that's exactly right. I'll say it slightly different, but it's the same idea behind it. It's our job is to provide the pros and cons where they want to go. So if they want to go to the left here, okay, let's figure out what we think are the pros and cons related to that decision. If you want to go straight ahead here, okay, well, that's a different calculus we need to consider. Here's what we think. And for us, we think we're pretty well equipped to do that, just given our experience in the space. We have a ton of CFO executive level experience. So we've seen a lot. We've dealt with SEC audits and things of that nature. So we love those conversations, because for us, when the GP is successful, we feel a very small part in their success, because we were there as a partner and we help them get through challenging times. And there will be challenging times. there'll be mostly challenging times.
Yes.
And that's okay. You got to fight through it. You got to grind
hard.
through it. But when you do see those victories, they are a bit more meaningful for us, I think so, on the emerging manager side than with an established firm that is, they have brand recognition.
this,
The
sure.
machine is in motion
Yeah.
and it's all moving forward. But when somebody launches for the first time and they're successful, that there's a great level of satisfaction, because oftentimes we've had very difficult conversations around the things that have come up during the fundraising process, or if they're having an issue somewhere, we try to jump in and help. I'm sure the same way that you guys do.
Yeah, and I would even say we would love to see more of that. I don't think fund managers leverage their fund admins as much as they should be or as much as they can be. And that's something that I feel like every conversation I have revolves around is get in front of us sooner. Don't come to us after you've chosen all of your other providers and you have this wonderful thesis and you're 2 weeks out from doing a first close. Involve us from the beginning. Come to us before you even start fundraising. Start the conversations with us. Let's talk through all of the pros and cons, like you're saying. Have those conversations, help them understand, okay, let's look at this from a holistic view, because you have access to CFOs, you have access to industry experts who can help you in that process. And a lot of times I almost feel sad when they come to us, and they're like, we're so close to doing a first close. And I'm like, that's great. I would have loved if we had picked up this conversation 6 months prior to this, because we could have helped you in that process and made your life a little bit easier and helped you to not feel like you're just going this alone.
Yeah, I couldn't agree more. I would love to move the fund admin conversation up in the process with the GPs, because we bring a unique perspective to all of it. You have oftentimes the lawyers on one side, and they're great at coming up with usually complicated documents that sometimes don't always work on the operations side. You can bring, I'll leave tax aside because tax is a different animal, but oftentimes, the auditors will come in and they'll opine on something. At the end of the day, we bring all of that together because we're the ones that sort of bring it to life from a financial statement perspective. We have to read the nuanced agreements, understand how everything is supposed to work, and then we later work with the auditors. And there are definitely some things along the way that we can make easier from an operations perspective. We can provide some guidance and say, hey, is the ROI on this thought process really worth it at the end of the day? And sometimes it is, sometimes it isn't. But again, that's goes back to the conversation with the GP. Is this a must-have or a nice-to-have for you? And does that fit where you want this firm to go with? I think what's interesting for me, especially on the emerging manager side, is I think a lot of new managers, while yes, it is their firm, but they don't own it, right? Whether it's from their logos, whether it's from the name, that stuff is important, but you've got all these other pieces as well to work through and get around. So really dive into being the GP and expand what I think, your brand that you're building, because all of that becomes critical as you start to build and grow your firm.
Yeah, and even being able to weight those conversations against each other, right? If you're talking to an attorney and they're saying this is the best way to structure your fund, take that advice back to your fund admin and say, this is what I'm being told. Is this something I should be considering? And if so, then what are the implications of that? Because depending on your structure is going to affect our costs and is going to affect what we're doing. And so the sooner that you can involve us into those conversations, the better, because then we can say, yes, your attorney is giving you some great advice here. Here's what you should know about that. Or here's a secondary opinion on this that we're never going to give legal advice. Let's caveat it that way, right? We're never going to give legal advice. But we will say maybe you should consider something else and take that back to your legal team and talk through if that could be an option. And then come back and talk to us again, and so on until you come to a final solution of this is the best way forward.
Yeah. We oftentimes will disagree with certain aspects of how something is presented to a new manager.
Yes.
Legal structuring being one of them.
Yeah.
Because I think what you find both, and this is not a knock on, the legal profession or the audit and tax profession, but the reality is I think sometimes we overcomplicate things from a structuring standpoint, and we can accomplish the same thing in a way less expensive structure. And we point that out a lot. And again, from my perspective, and I'm sure it's the same on your end, we're looking at it as if, okay, well, if I were the CFO of this particular GP, what am I benefiting? What am I gaining here? I know that I'm spending this over here, but what is the ROI on that spend from a legal structure perspective? Can we accomplish the same things by changing the structure, considering maybe a series partnership as opposed to 4 or 5 different SPVs all audited, for example? Yep. There's different cost implications for making those types of decisions, and we as fund administrators can certainly give some perspective. We see lots of structures, and we have to work within them. We don't just have to draw up the legal documents around them. We have to do the day-to-day operations. So we have a really nuanced perspective around what it takes to maneuver our way through a legal structure, or certain types of legal structures.
This line of discussion leads me to believe that the two of you are psychic, because this was actually an audience member question, which is, hey, essentially, when should an emerging manager engage with a fund admin? And I think the answer that we've come to here is like, as soon as humanly possible, way before they think they might need to. Get them involved, because there's an advisory component, and how does everything play together?
Well, and to that also is we're all networked. We have, like, for example, if you're a new and emerging manager, we have an entire network of service providers that all focus on new and emerging managers. And so we're not going to send you to Deloitte to have a conversation about audit and tax if you're raising a $20 million fund. Right. We're going to send you to someone who's going to not only know this is a smaller fund, there's going to be nuances involved in that, but they're also going to need support. They're going to need some hand-holding through that process, and they're going to need a cost that's going to be amenable to their fund size. And so we're already networked with all of those groups that we can say, talk to us, and then we'll put you in front of everyone else that you need, and we'll help you vet which of those conversations and which of those providers are going to ultimately be the best. And so selfishly, I would say talk to your fund admin as your first conversation. Make that your first phone call. When you say,
you're not biased at all. I like that.
And because start there, and then you'll know what else you need, right? There's all sorts of things that fund admins may or may not provide. And so that's also part of this too, is understanding, okay, I need a bunch of services. I need a lot of things going on in my fund. Which of these is a fund admin going to do versus which of these is going to be an additional service provider? What are those cost implications? How do I go about even finding these people? All of that starts with us. And so if you come here and you give us the first phone call and you just say, I don't know what I don't know, help me. We love that. We want to answer that. And we're more than happy to sit on the phone however many times that takes and however long that takes to really help you understand what you need.
Makes sense.
Yeah.
Were you going to add, Mike?
Yeah, I do. Because I couldn't agree more, but I'll come at it from a different angle, not from, the selfish fund admin angle.
To be clear, that did not come across.
No.
That I am.
I'll describe it differently. I'll describe it from the perspective of incentives, right? Regardless of what you're doing in life, if you're working with other people and your incentives are aligned, you're going to have a better outcome. So what does that mean? Well, me as the fund administrator, we work daily with our clients. So if you come to us and say, hey, I'm launching a fund, I don't know where to go from a legal perspective, I don't know what I should be doing from an audit and tax perspective, we're going to be working with you on a daily basis. So if we put you in front of somebody that doesn't ultimately deliver, we have to hear that and reckon with that every single week that we're talking with you. I think the relationship is a bit different when you have, you know, the law firms that are drawing up your formation docs and you're going through a closing. But after that closing, there's not a ton of interaction. Same thing with your audit and tax. You deal with them a few times throughout the year. So when I look at the incentive structure of really working with and partnering with a general partner, it doesn't mean, you know, we should be the first call. I'm not saying that but we should, as fund administrators, be brought into the process much earlier in many cases than we are, because I think our incentives to work with general partners, because of how the relationship evolves from that point forward, is the reason why it makes sense, on top of all the operational expertise that we can provide you as you're looking now to build out your firm and launch your firm and so on and so forth. So you get to the same answer, but I'm using it. I'm using it through the incentive structures.
Yeah, and basically what you're articulating is this is a partnership,
yes.
right?
Yes.
You're working on an ongoing basis incredibly closely. Okay, I would be remiss if I didn't ask this question. So the two of you have collectively seen hundreds of funds. I would love to hear, anonymously, you know, you feel free to leave names out of it, but tell us a disaster story so we know what not to do, okay?
That's a tricky one. I'll let you take this first.
Thanks, Mike. No, I'm probably going to deflect from sharing a specific story just, you know, for sensitivity. But I would say the biggest thing that goes wrong, or how you create the perfect storm, right, is ignoring the advice of your providers, right? Let's start there. Say you come to us, you're talking to us, you're asking us like, hey, what's best case scenario? We tell you and you don't do any of it, right? Like, that's automatically going to lead to a less than ideal outcome. And whether that's your fund isn't launched, whether that if that's your fund not being able to be raised to the extent that you want it to be, or just a lack of trust between you and your providers, that's also going to lead to less than ideal outcomes. And so that's part of it. And then I think the other thing is just, again, lack of preparedness. You know, lack of going into this process being prepared, knowing what you're up against, knowing what you need in order to be successful, and not doing the due diligence on all of that. Asking yourself hard questions like, am I the right person for this? Is this the right time? And really being honest and digging into those details. It's easy to get caught up in the excitement of, I'm going to raise a fund, I'm going to do this, this is going to be awesome, we're going to invest into these areas, and here's what our LP base is going to look like. And it's easy to let that train kind of take off. And if you don't pause and also ask yourself, is this right? Is this the best situation to be in? Is this the right timing? If so, what do I need to consider in order to do that? Then I don't really see a way in which there can be a successful outcome, because there's not a sense of, I'm absolutely 100% prepared across the board to be able to tackle this.
Yeah, and what a great answer, and it's such a loaded question.
I know, I was like...
You know, again,
I was trying.
Yeah, I won't share anything specific, but I do think there are some common things that you see. So I'll kind of give you a holistic answer, and it really applies to whether you're an emerging manager, existing manager. I think communication is key. If you don't communicate properly internally with your external partners, it all falls apart. Maybe not today, maybe not tomorrow, but at some point it breaks down because of that. Having a plan. If you don't have a plan, what are you working towards? What are you trying to benchmark against? And again, that doesn't mean that the plan is the be-all, end-all. We can't pivot off the plan. Just the opposite. The plan is the framework that you use to then guide yourself to figure out where you need to be and where you're trying to go. So I think you always have to have planning. You need to be brutally honest with yourself about what's working or not working. Looking in the mirror is critically important. So as a firm, you have to self-reflect the same way that we try to, because if you don't, And again, it's all around communication and how you communicate, and what you're willing to admit to. So I think for me, those are three things that are really, really important to avoid being on the list of horror stories. There are plenty of horror stories
Yes.
out there.
There are.
And, to avoid being on that list, I think those are three key areas that I would focus in on.
I think that's fantastic.
I love that.
This time has absolutely flown by. We've got a grand total of 2 or 3 minutes left.
Oh,
Any
wow.
last words of advice before I wrap us here? Guidance, advice, thoughts, anything that's occurred to either of you?
Go ahead.
I think I'll revert back to what I just said. I think communicating with your partners is critical. Having a plan about, outlining where you want to go, a year out, 3 years, 5 years. It sounds very academic, but I think it's really important because it gives you purpose, it gives you a vision, gives you something that you're trying to work towards and achieve towards. So really, really important. And stepping back and taking a real a self-assessment as a firm, as each individual employees of the firm about what you're doing well, what you're not doing well, and then coming up with a plan around how to fix that. The one thing I will guarantee you is whatever you think is going to happen is not going to happen within 99% certainty of that, because that's just the way it goes. There's not a single manager, either emerging or existing GP, that's been the case in our experience. So learning how to pivot, learning how to be creative, and yeah, so I guess that would be my advice.
Yeah, I don't think I could have said it any better. So echoing everything that you said and adding to that things that we have talked about already, right? Having a support system.
Yeah.
Find the people that are going to stand by you, that are going to help you through this. Know that you can't do it alone. Even if you're a solo GP, you can't do this alone. You need support. You need the right people in your corner helping you through this. So doing your due diligence to find those providers, to find that support system. And then, like you said, it's never going to go the way that you plan. So plan for that. Bake in room, right?
Yes.
Have a plan, but bake in room to be able to pivot that plan, rework the plan, scratch the plan completely, rewrite the plan, whatever it takes. Be open to what is going to happen for you through this process.
Those were great notes to end on. Michonne, Mike, thank you so much for doing this. This is fantastic. And for all the folks watching, just one last quick thing. So obviously we've got some outstanding partners in our preferred partnership network. We're very grateful to have them here. And then additionally, if you're interested in learning more about the Preferred Partnership Program, you can visit the website at, and I made sure to write this down so I get it right, it's AngelList.com/partners. Or feel free to email us, it's partnerships@AngelList.com. Thanks everybody, and enjoy the remainder of the sessions in AngelList Confidential.